Welcome to the Riskwiser Zone, the podcast where we dive into the world of stocks and finance to help you make informed decisions about your investments. I'm your host, Louie, and I'm excited to share today's stories with you. We're starting off with a big one. You may have heard about the recent controversy surrounding Jane Street, a US-based proprietary trading firm that's been accused of manipulating index levels in India's derivatives market. The Securities and Exchange Board of India, or SEBI, has ordered Jane Street to deposit nearly 4,844 crore rupees into an escrow account, citing unlawful gains from its trading activities. But what's really interesting is the ripple effect this is having on other companies. Nuvama, an Indian brokerage firm that served as Jane Street's execution partner in India, has seen its shares take a hit, despite not being directly named in SEBI's interim order. The company's shares are down 16% in 1 month and are trading flat year to date. Now, it's worth noting that Nuvama hasn't been accused of any wrongdoing, but the fact that it was involved with Jane Street has raised some eyebrows. The Income Tax Department has even raided Nuvama's offices, although it's not clear what they're looking for. This story raises some important questions about the integrity of India's financial markets and the role of regulators in preventing manipulation. On one hand, SEBI's action against Jane Street shows that the regulator is taking steps to protect investors and maintain fair market practices. On the other hand, the fact that Jane Street was able to operate for so long without being detected raises concerns about the effectiveness of these regulations. We'll be keeping a close eye on this story as it develops, and we'll bring you updates and analysis from our team of experts. In the meantime, we want to hear from you. What do you think about the Jane Street controversy? Do you think SEBI is doing enough to prevent market manipulation? Let us know on social media using the hashtag #RiskwiserZone. We'll be right back with more from the world of stocks and finance on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We're continuing our exploration of global trade and economic developments that are shaping the world we live in today. Our previous segment delved into the intricacies of international relations and how they impact business and economies worldwide. Now let's dive into a critical aspect of global trade: tariffs. The recent actions by President Donald Trump have sent ripples across the globe, affecting various countries in different ways. On one hand, we see countries like Australia dodging the latest tariff hikes, with most imports remaining at a 10% tariff rate. This is significant for Australian businesses and consumers alike, as it provides a degree of stability in their trade relations with the United States. On the other hand, countries like Canada have faced increased tariffs, with a 25% tariff on all goods excluding potash and a separate 10% tariff on energy resources. The situation is even more dire for smaller economies, such as Syria, which has been given a 41% tariff rate, and Myanmar and Laos, which face a 40% tariff rate. It's essential to approach this topic with a nuanced perspective, recognizing the complexities of global trade and the various factors at play. While some argue that these tariffs are necessary to protect domestic industries and address trade imbalances, others contend that they can have far-reaching negative consequences, including higher prices for consumers, reduced economic growth, and potential retaliation from affected countries. As we navigate this intricate landscape, it's crucial to consider multiple viewpoints and evaluate the evidence objectively. The impact of these tariffs will likely be felt across various sectors, from manufacturing and agriculture to services and technology. The situation is fluid, with ongoing negotiations and developments that can shift the trade environment rapidly. As such, businesses, policymakers, and individuals must remain vigilant, adapting to changes as they occur and seeking opportunities for growth and cooperation amidst the challenges. Stay tuned for our final story of the day, right here on the Riskwiser Zone. Welcome back to the Riskwiser Zone. We've had a fantastic show so far, discussing the latest market trends and insights. Now it's time for our closing segment, where we dive into some of the most interesting stories from the world of finance. Today, we're looking at a few AS-listed companies that have caught our attention. First up, we have Beforepay Group, a pay-on-demand lender that's been making waves with its quarterly report. The company saw a 76% increase in net profit before tax, driven by an 18% increase in quarterly advances. This is certainly an impressive result, and it's no surprise that the share price has rocketed 45% on the news. Next, we have BSA Limited, a communications aficionado that's pulled itself off the canvas with a strong quarterly report. The company posted a 7% revenue increase and a whopping 42% jump in EBITDA, driven by operational efficiencies. This is a great example of a company adapting to changing market conditions and coming out on top. We're also keeping an eye on Black Dragon, a junior miner that's eyeing a golden run in Europe's mining landscape. The company's Salav project has robust economics and low operating costs, making it an attractive prospect for investors. And with potential financiers circling, this could be one to watch. Finally, we have Bossa Limited's peer, BSA's peer, Beforepay's peer. No, just kidding. We actually have Bossa's fellow runner-up, Black Dragon's fellow contender, BSA's fellow comeback kid. No, seriously, our last company is none other than no one, because the last one was Beforepay and then BSA, so we'll just stick with those. On a more serious note, it's always exciting to see companies like these making strides in their respective industries. However, as always, we must remind our listeners to approach any investment opportunity with caution. It's essential to do your own research, consider multiple sources, and never invest more than you can afford to lose. That's all for today's Riskwiser Zone. Remember to like, share, and subscribe. And until next time, invest with caution. Bionri.